What's up, boys? In this video, we're going to talk about Dogecoin. What is going to be the next move for Dogecoin? Is it going to go all the way back down to, well, basically do a full retrace? Or is there going to be a secondary pump incoming for Dogecoin, and how you can take advantage of that? If you're in a short right now and you feel like you don't know where to take profit, this video is going to answer that. If you are in a long right now and you are in the red, or just want to figure out where to start buying Dogecoin for the next Elon pump, then stick around to the end of this video. But for now, let's talk about the last time that I made a Dogecoin video. I was wrong. Okay, I was wrong. I said to look for shorts at 0.09 and 0.118. I admit it. Fair enough. I was wrong. I do tend to make mistakes sometimes. However, I do urge you guys that before you start blaming me, and again, I don't say this to defend myself or to justify the analysis or whatever. I only say this with the hopes that you guys can see the underlying sort of principle and concept that I was trying to get across to you, which is the fact that in the markets, it is all just about a game of liquidity. For example, previously, the reason why I said that you might want to look for a short at 0.09 was because these are range highs and you have relatively equal highs over here. Now, usually, does it pump straight up and just completely ignore the liquidity? No, usually it doesn't do that. But when Elon Musk gets involved into the picture, it could happen. And this is exactly what happened. That's why I mentioned, hey, look for shorts rather than short here or short here. That would be a very bad idea. Just like how I'm not going to tell you like, hey, if the price is dumping, I want you to buy here, 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 here. Now, if that is the case, you will find yourself getting wrecked a lot, because the act of trying to find the bottom, right? To try to find the bottom or try to catch the top is the act of catching falling knives or flying knives in this case. And it is generally not a very good idea. Now, a better thing to do, which I'm going to give you a pro tip right now, and I'll teach you exactly how I approach, shorting. Because even though in the video, I did not manage to predict the top, and honestly, I wasn't trying to predict the top. I was just saying like, hey, if price goes above these kinds of levels, you're going to want to consider taking a short. Okay? Because anything that goes straight up tends to come straight down. Now, currently, I have a $10,000 profit Dogecoin position, and you can see that the entry price is somewhere about there. Now, I would like to share with you the exact method that I use when I determine what is a good area to get into a short during a massive, massive pump like that. So let's just spend like a couple of minutes talking about this. So basically what I do is I go mark out, like I'll start on the higher time frame first. Okay. You always want to start off your analysis on a higher time frame. The reason for that is because you need to understand the environment. Before you understand the environment, it is very hard for you to go into the trenches and try to figure out like, hey, I need to go long, go short, because chances are in the lower time frame, it's going to look very messy. Is it going up or is it going down? But when you start from a higher time frame, you will understand which is the level that it's reaching for. Once you understand the level that it's reaching for example, at this point right here, the moment I saw that Dogecoin broke market structure, I was like, hey, it's probably going to go here. Why is that? Because this is the key level on the daily chart. This is the key level on a higher time frame. Once you figure out the key level on a higher time frame, for example, right now I'm expecting a retrace into this previous range high, and I'll get into why I believe this is going to be the case. There is something that you will see once I zoom in to a lower time frame. But again, step one is to identify your higher time frame key levels, because otherwise you don't know your environment and you're just going to be shooting around blindly in the lower time frames. Secondly, you go into the 4 hourly. Zoom in a bit. Is there a particular area of value that you might see? In this case, I do see a 4 hourly bullish order block over here, which I think that Dogecoin would be potentially find a bottom there, but it will definitely find some kind of support. And this is where I'm looking to close out my short position. This also happens to line up. Again, notice how I'm doing my analysis still, trying to identify what is the environment. If I draw a fib from this low over here to this high, because if we zoom in, you can see that this move basically began, right? This move basically began from this low here. So with that low to that high, you can see that recently it found support at the 0.618, which is known as the golden pocket, right? The 618 of the Fibonacci retracement is known as the golden pocket. It is known as the money zone. Why is it called the money zone? Well, price just tends to be able to find really good support at the 0.618 or the 0.705. It's literally called the golden level. And usually when you are in an uptrend and price retraces back into either one of these levels, it is a really good buying opportunity, just like how you got a pretty sizable bounce, right? It's about 7 to 8%. But I believe that the better entry will be closer to the 0.705 because it happens to line up with a bullish order block. Now, an order block is an institutional area value. Now, just to illustrate this for you, I want to show you the example of FTX, which I'm going to be making a video next on how you can take advantage of this insolvency sort of FUD. Now, for those of you who don't know what's going on, there is a lot of talk about FTX going insolvent. So it's sort of like a lunar liquidation event from the past. And you all know how many people, well, a lot of people lost money during that event, but a lot of people also made a ton of money from shorting and even going long and catching the bottom. I'm going to make a video about this. If you would like to see that, drop a like on the video. But again, check it out. This is a bullish order block on the daily chart. Look at where FTX finds its bottom. Similarly, I'm going to go back to a Litecoin video. I made a video on Litecoin just recently, and I said, hey, the price goes into this block right here. If I go onto the 1 hourly chart, you will see this. Price goes into this 1 hourly bullish order block. Check it out. Price bounces by 5% immediately. So order blocks are how you catch bottoms. And for Dogecoin in particular, that is the level that I'm going to be looking at to, well, basically take profit on my shorts and perhaps find a potential bottom on Dogecoin. The 705 also is considered to be a generally pretty deep retrace. So again, notice like this will be like pro tip number 3 or pro tip number 4, I don't know, which is you want to look for multiple points of confluence. You want to find data points to support your theory, but also prevent yourself from falling too deep into confirmation bias. For example, if I start seeing market structure shift right now to the upside, I'll be like, okay, I was wrong. I admit it. The goal in the market is not to be right or wrong. It is to make money. Like if the market shifts and you have like some kind of invalidation of your theory, you have to be able to adapt your mindset and switch quickly, because ultimately that's how you're going to be profitable in these markets. The only thing certain about these markets is that nothing is certain. And so you have to just read and react. So similarly, the reason why I always talk about, hey, consider going short at this level, or like watch this level for a short and watch this level for a short. Or the reason why I plan it out beforehand, like, hey, these levels, right? Watch these levels. Why is that? I want you guys to be prepared for any kind of scenario that happens. Again, that ties back into my username on TradingView is literally the Grand Strategist. So strategy is a big part of my trading philosophy. I am a big believer of really understanding your environment, understanding every possible scenario that could happen and being prepared for every possible scenario. And just like in strategy, just like when you're in war, like, of course, this is not war, but still strategy applies. The best generals do not have like the best strategy per se. The best generals do not just like, okay, we're going to attack from here, we're going to flank from there, and you know, they're going to fall into our trap or whatever. The best generals are usually the type of general that has the ability to read the situation calmly, clearly, without any sort of confirmation bias, be able to adapt and react and form a plan depending on what the situation calls for, basically. And you must have the same ability if you want to do well in trading. A lot of the times people get wrecked because they have confirmation bias. They think that just because influencer A says this must happen, then they think this must happen. But again, the only thing that's for certain in life is death and taxes. The only thing certain in these markets is that it is uncertain. So that was just a long rant. So back to how I approach, just trading in general. So now that I have identified the higher time frame bias, right? What key level is the higher time frame reaching for? And in this case, I have identified that if Dogecoin wants to find a bottom and go back into an accumulation for the next move upwards, I believe that it will at least go to the 0.705 on the daily chart. So now that I have the higher time frame bias in mind, and I've identified an order block as well as using a fib to add confluence to my theory, now I can go into the lower time frame to look for a trade. And how do I look for a trade? This is going to be pro tip number, I don't even know how many this is, but I want you to understand that the best trades and the best traders, the most important skill that they have is not the ability to read the market. That does not even make up like 30% of all trading. In fact, probably not even 20%. Knowledge does not matter, because I want you to think back to all the times when you got wrecked trading. Was it because your analysis was incorrect? Well, probably there might have been something to do with that, but I'm willing to bet that the bigger reason that you lost a lot of money or you lost a trade was because of your inability to control your emotions. You probably felt a lot of panic or like greed, or maybe you wanted to add on to it. You couldn't let it go easily, or maybe you couldn't let go of the trade in time, or just, be able to maintain an objective state, right? Your emotions came into play, and you will find a lot of emotions involved when you are not able to be patient, right? I'll give you an example. For now, Dogecoin is at the 0.618. For example, if I was a day trader or a scalper, yeah, I would be trading here. But for me in particular, I specialize mostly in swing trading as well as short-term trading. So for me, the thing that helps, especially with swing trading or just trading in general, is to wait for key levels to be hit, right? I'm going to use this example. For example, on the 5-minute chart, right now you have a range low and potentially a range high over here. So currently price is trading within these two levels, and anything that is in the middle here, you can consider this as just noise, which means if you want the best trades, you're not going to be going short here and placing your stop loss all the way up there and then targeting there, right? You can see you only really get like a 2 risk to reward ratio. But for example, if I take a trade once the range low has been taken and I go long, and maybe I set my stop loss beneath that low, now I target, let's say, the range high, or maybe a level above the range high. Maybe let's say I want to target that bearish order block right there. So what happens then? Check out the risk to reward ratio, 10. Just by waiting for price to hit your key levels, you will literally increase your profits by 5 times. Now, is this easy to do? Might not be the easiest thing, but is it simple? Yes, it is simple. I always like to say this. Trading is simple, just not easy. A lot of people struggle with emotions, a lot of people struggle with execution, but the concept itself is very simple. All you have to do is mark out your key levels, understand your higher time frame bias, and just be patient until price gets to those key levels. For example, once price takes out the range highs, that is an opportunity for me to go short. But rather than going short directly from here, I might go short at this order block right here, which gives me a very obvious point of invalidation. Because if the order block, right, the top of the order blocks get taken out, then that trade is invalidated. And where do I target? Well, I target lower. Assuming that my higher time frame bias is pointing towards the downside, I'm going to take my profit somewhere around there. See, again, that's a 10R trade. Simply by being patient and not taking a trade in the middle of nowhere. That is honestly one of the biggest reasons you just fail to trade, or just fail to make money, or just lose money. You're not waiting. Like, if this relates to you, a lot of people have been through this. I've been through this. Everybody deals with this. Everybody struggles with this. But I promise you, if you can just fix this one thing and just learn to be patient, let the trade play out, just wait for the trade to come to you instead of you trying to chase the trade, you're going to do so well. And same thing here. Again, that's not a detour. So for example, once price hits, let's say 0.09, that is my key level, right? What I look for then is a lower time frame break of structure. For example, my lower time frame would be the 5 minute. That is where I would be executing at. I would look for something like this, right? Where, let's say this was the swing high. Okay, you broke the swing high, and then you come back down for a retrace, and then I go long, for example. Or maybe in this case, where you definitely broke structure on the 5 minute, and it does seem like bullish market structure, I would wait for a sweep of liquidity. In this case, this sweep of liquidity was taking out this sort of trendline liquidity over here, as well as the liquidity that is over here. So once this liquidity has been taken out, I will also, just to confirm, you can see again, once more, if you draw a fib from this low to this high right here, you can see it's a 0.70616, 618, and 0.705. Once it hits the golden pocket, you're good to go, right? You take a trade. For example, I might take a trade right here. I'll place my stop beneath the 705, or usually I would do it beneath the 786. Of course, this is not a black and white thing. Again, the sign of a good trader is someone who knows how to adapt and react to any kind of situation. In this case, I would target something like this. Oh, actually, that's the wrong way to do it. My actual target, right? So doing it this way, by allowing the price to come into your key level and then not having the urge to FOMO and set a market buy here, or just set a limit there and get into it, and then now you don't know where the hell you want to put your stop loss. For example, where do you put your stop loss in this case, right? Down there. There's a 7% stop loss. Mate, you're not going to make a lot of profit if you set your stop loss that wide. Instead, if you do it this way that I'm teaching you right now, you will literally 10x your profit, because let's say that I was going for an entry for the 0.618 retracement of this range. So let me draw it again. From that move to that move, you can see the 0.786, the 0.618. Let's say that I'm going for an entry on the 618. Where the hell do I place my stop loss? Right? Beneath that order block? Okay, sure. That's a 13% stop loss, right? Even if Dogecoin were to just 2x from this point, right? I'm going to show you an example. Even if Dogecoin were to 2x at this point, from this point onwards, which is it's not very easy because Dogecoin is a fairly large cap coin, my risk to reward ratio will literally only be 7.4. Like, that is nothing, dude. Even on the 5 minute chart, I could have found a trade that gave me a higher risk reward ratio. So really, it's really not about the percentage gain. It's about the risk to reward ratio. If you learn how to see the markets through this kind of lens, dude, you will be so successful. Now, contrast that to, now let me just dive into the 5 minute chart again to show you. For example, if I did this kind of a trade, right? After I get this entry, I will target based on the higher time frame target. If I believe that the higher time frame target can reach, let's say, right, in this case, I believe that it will pump all the way to 11.9. In this case, this would be a 20 risk reward ratio while only having a 20% gain. Now, if I go for 100% gain, let's say, right, it's just an arbitrary number. This is just to illustrate it for you. Just the act alone of going into the lower time frame, instead of setting a limit and like having a really wide stop loss, you literally increase your profit more than 10 times. 10 times. And this is something that can be hit. This is something that can be done. Just like proof that I showed you right here. This is something that can be done. It requires patience. It requires the ability to first identify what is your higher time frame and understand your environment and understand what you're looking at. Again, it's nothing complicated. Okay? Trading is simple. Just might not be easy. So at this point, I spent like 18 minutes giving you a full masterclass about my way of trading instead of actually talking about Dogecoin. So now let's spend a couple of minutes talking about Dogecoin. But honestly, man, that session right there should have been worth much, much more. To anyone who stayed until this point so far, you are going to be so ahead of everybody else. Those lessons is the exact lessons that people pay like thousands of dollars to learn, and you just got it for absolutely free. So if you're still here, congratulations. So currently, as I'm expecting, the ideal level for me to look at is 1 at around 0.09, but the other level that I'm looking at for a really deep retrace would be 0.075. Look for longs there, right? Using the method that I just taught you. And if you want to learn more about that, I will link you to one of my videos where I spend like 25 minutes talking about that exact strategy. But the key here to understand is next time, if you watch any more of my videos and I say, look for a long here or look for a short here, this video is like that method right there is exactly what I'm talking about. And lastly, before I cap this video off, do I think Dogecoin is going to do another pump again? The answer to that question is actually, it all comes down to Elon Musk, to be honest. Dogecoin is a coin that it can be very irrational, as you've seen from this movement here. It defies all logic and all the rules of how the markets are supposed to move when Elon tweets about it. So can I be absolutely certain that this is going to go up again? Absolutely. When is it going to happen? I don't know. But if you look at it from a purely technical standpoint, these two levels, if you're a big believer in the Doge army or you're a big believer of Elon Musk, then chances are you will expect some kind of a tweet from him around these levels, right? Again, the market makers have a way of manipulating the price. For example, I'll just use one of the examples just to illustrate this for you. Recently, Matic did an absolutely amazing trade. I made a video about this as well, where basically Matic, before like all the altcoins at this point were still going up, except for Matic. It was forming a hits and shoulders pattern, like it's a distribution pattern, and it was dumping before all the altcoins were taken off. Right when it hit this bullish order block over here, Facebook came and announced that it was allowing Polygon, like Matic, to be integrated with Instagram for people to sell and buy NFTs directly on Instagram using the Polygon network. But even before that, right, for days, the market makers have been dumping the price so that they can accumulate more of Matic so that when the news arrives, they can take advantage of this huge pump. You can see, I even made a video about this. Of course, I didn't know what was going on in Facebook and that they would release this news, but the price action says all, because the price action will show everything. If you simply learn how to read the price action, if you spend time, if you dedicate time to learning how to read the price action, dude, you will understand how much manipulation is going on in these markets, and you will understand that these market makers are always in on it. Before the news happens, these market makers are already positioning themselves in, and once you learn how to read their footprints, once you learn how to see the clues that they're leaving behind, dude, it is an absolute game changer. If you watch until this point so far and you want to follow along with not just my trades, but my team's trades and just get access to all the latest market reports, consider joining the private Discord group. The link will be in the description box below. But now, as promised, I will link you to the video of my bread and butter strategy. Hope you found value from this video. Bye-bye.